Good afternoon, and welcome to the VELOCYS PLC investor presentation. Throughout this recorded presentation, investors will be in listen-only mode. Questions are encouraged and can be submitted at any time using the Q&A tab situated on the right-hand corner of your screen. Simply type in your questions and press send. The company may not be in a position to answer every question received during the meeting itself. However, the company will review all questions submitted today and publish responses where it is appropriate to do so. Before we begin, I would like to submit the following poll. And I would now like to hand you over to CEO Henrik Wehrborn. Good afternoon to you.
Good afternoon, everyone. Thank you, Alex. Welcome to VELOCYS PLC IMC presentation. I'm Henrik Wehrborn, the CEO of VELOCYS, and I'm joined by Phil Sanderson, our CFO. I will introduce the company over 6 slides or so for about 10 minutes, and then hand over to Phil for financial update, another 10 to 15 minutes, leaving plenty of time for questions. However, first I would like to take a step back and define one key technical term to make sure we're on the same page. That term is decarbonization. The word decarbonization could be slightly misleading, frankly. I would suggest we think about carbon circularity, reuse of carbon already in the atmosphere, leaving fossil carbon in the ground. There's also another part of decarbonization, that is carbon removal. That's sequestering CO2 in the atmosphere back into the geology. Fortunately, VELOCYS technology is well suited to enable carbon circularity and carbon removal, and that's what this presentation is about today. So how we do that. So I recognize that many of you know the company from way back. Some are new to VELOCYS. I will spend the next few minutes talking about what VELOCYS does, who we are, what our technology achieves, and what we enable. But fundamentally, the way we deploy our technology today is in the service of decarbonization in its broadest way, the way I just defined it. So we are VELOCYS. We are an international sustainable fuels technology company. And why are we a sustainable fuels company? Well, that is the most productive way to achieve decarbonization for the heavy transport sector, such as aviation and heavy road transportation. We have a patented technology enabling scalable production of drop-in net zero sustainable aviation fuel, which is called SAF. We have a competitive, commercially demonstrated FTS solution using solid feedstock and hydrogen from renewable power and CO2. That's where the carbon reuse and carbon removal comes in. We VELOCYS, we apply a capitalized scalable licensing model. The revenues from our technology licensing, engineering services, company reactor and catalyst supply over the lifetime of our clients. Our clients are typically biorefineries that help to remove carbon from the atmosphere, reuse the carbon and sequester the carbon, enabled by our technology. They pay us both upfront and recurring fees for these services. VELOCYS, in order to accelerate the adoption and the implementation of these technologies, we have, together with our partners, project developed 2 full-scale biorefineries, one called Alto in the UK and one called Biofuels in the US, providing a standardized blueprint for customers. We have a global investment bank mandated to raise remaining development capital for these reference projects, who will therefore be owned and taken forward by other owners other than ourselves and our current partners. We are facing an incredibly high growth market driven by decarbonization mandates and incentives with increasing global policy support, which I will get back to more in detail in a minute. Some of our top tier partners we work with are British Airways, Southwest Airlines, Bechtel, and a suite of other advanced technology licensors that come in upstream and downstream from our technology that we provide into the biorefineries. We have a sharply growing client pipeline, and we expect meaningful revenue generation in 2024 onwards. Thank you. So what is SAF? Again, SAF is a slightly misunderstood concept as well. SAF is not a different kind of jet fuel. SAF is identical to the jet fuel that is used today into all commercial and military aircraft, but produced in a different way from a feedstock that is not a fossil resource such as crude oil. So it's a non-fossil feedstock, sustainable feedstock, where the carbon comes from the atmosphere instead of from the geology. That's the definition of SAF. SAF can be made in a number of different ways. There are only 3 commercial pre-approved conversion pathways today. There are a number of others in research and development mode, but that will take many years before they are commercially available. And we are the leading expert in one of them, which is called gasification to FT process that can be designed to yield not only a reduction in carbon intensity, but negative carbon intensity, which is another way of saying that it incorporates both circular carbon reuse as well as removal of carbon. That's when you have a carbon intensity below 0, it means that you've integrated a certain amount of removal of CO2 from the atmosphere at the end of combustion of the fuel itself. So that includes CO2 sequestration. Now the fuel when used is a drop-in and must be a drop-in fuel. No commercial or military aircraft in the world will ever use any other kind of jet fuel than the standard, globally agreed current specification of jet fuel. They are very happy for it not to come from crude oil. They don't care where it comes from, but it must be, the final product must be what you see on the picture in front of you, and have the same energy density, chemothermal properties as currently jet fuel has. Now, the demand for alternative jet fuel, SAF, as we call it, is going to increase dramatically from where we are today, where we have some indicative, let's say, mandates in some countries, which is growing very quickly now. And recently, you might be aware that the UK announced that they're going to demand that every 10th flight has to be entirely carbon-free from 2030 onwards. 10% of jet fuel has to be replaced with carbon-neutral fuel by 2030. That's only 7 years or 6.5 years from now. Across Europe, slightly slower pace initially, but then accelerating, so 5% from 2030 onwards, and the same, but in a different way across US and many other countries. That translates roughly into that the demand for net zero jet fuel goes from maybe barely 500 million liters in today to 45 billion liters by 2050. So like 100 times increase of the demand for this technology from where we are today. In addition to that, the synthetic aviation fuel that comes out of our technology has significant air quality advantages, such as 0 sulfur, much lower particulates, much lower nitrogen oxides upon combustion over fuel that comes from fossil crude oil. So initially, another terminology that you need to be aware of and have heard about probably is that the first generation of alternative jet fuel is produced today in small volume, comes from vegetable oils. That's called the HEFA process, hydrogenation and esterification of vegetable oils. That is technically possible, and it is done in modest volumes today, and it is the only type of SAF that is commercially available today. Now, we do not work with vegetable oils. Number one, it's difficult to find vegetable oils that are really truly sustainable, where you can prove that there is no competition with the food chain. In any event, it is limited availability. And also, the process of upgrading vegetable oils into fuel is much more efficient and carbon effective if you use it for road fuel, i.e. diesel, than jet fuel. So it's not a particularly desired pathway. It can technically be done and seems to be initially probably allowed in European and UK mandates the way proposed now, but is disincentivized and preferred for road fuels. Therefore, the demand for second generation advanced SAF via properly synthetic paraffinic kerosene, which is the technical name for our type of pathway, is going to be very, very strong and will replace any HEFA very soon and fill the huge demand gap that we see in front of us. Now, a little bit more about our technical solution. So the FT synthesis is a catalytic chemical reaction that turns a mixture of hydrogen and carbon monoxide into liquid fuels. That's pretty straightforward. That chemistry was discovered about 100 years ago, and VELOCYS has miniaturized that technology and made it deployable in a distributed way close to the feedstock. We've integrated an end-to-end process that converts sustainable wastes to syngas and then to sustainable liquid transportation fuel along the lines that you see on the right. We've developed this technology in our laboratories here in Oxford as well as in Ohio. We've tested in pilot trials around the world in a number of different locations on various feedstocks, including woody biomass waste, municipal solid waste, landfill gas, and other types of carbon forms that have no alternative use, and demonstrated at full commercial scale. These products are high-quality versions of existing fuels, which I emphasized before, and no changes in engine or infrastructure required. That's critically important. If you were proposing a different kind of fuels to the aviation industry, you have 30 years of let's say, demonstration and phasing out and phasing in front of you. It is extremely unlikely to happen. Now, VELOCYS has a proprietary IP-protected FTS technology comprising of highly reactive catalyst and a bespoke reactor to be used in an innovative way to manufacture these kind of fuels. We're protected by close to 200 patents worldwide in all the large jurisdictions, with a runway of close to a decade of runway, in a sort of walled garden approach to our IP. So it's very difficult for anybody else to come in and raise money and develop a technology similar to ours, because we own all the major patents in this space. So it's very strong competitive position of VELOCYS with very high barriers of entry into this business. Therefore, we can, as a shareholder of VELOCYS, realistically expect excess returns on back of that technology, because it's very well protected and very well defended. Next page, thank you. So why now? What has happened in the last year? Well, hopefully you're familiar with the introduction of the Inflation Reduction Act in the US, IRA 22, which challenged the rest of the world to come up with something similar. It created incredibly strong incentives for decarbonization in the US domestically. Now, they're so strong, so most investment money and technologies are now getting attracted and drawn into the US. If any other country, Europe, UK, Far East, are going to be able to compete for that technology and those investments, they need to essentially match the incentives in one way or the other with what's happening in the US. And in the US, it's very generous. There is a stack of credits from the federal side, federal renewable fuel standard, RIN credits. There is a producer tax credit from the IRA 22 that's very generous for domestic production of zero carbon jet fuel from organic sources. There's a low carbon fuel standard in certain different states, like California, which provides additional incentives for low carbon decarbonization. And there is something called the SAF blenders tax as well, which is all in all adds up to very, very strong incentives for the decarbonization service. So it is the removal and circularity of carbon that gets rewarded. The amount of fuel is relatively limited, and frankly, the airlines, they don't see any difference of the fuel if it's SAF or fossil jet fuel, because it does the same job. So they want SAF with the lowest possible carbon intensity that gives them the maximum decarbonization per gallon of fuel used, so that they can then continue their traffic as close to what they do today as possible. That's worth reflecting on, because it doesn't mean that we need to produce we don't need to produce 10 million barrels of SAF per day to replace all jet fuel in the world. We need to produce a fraction of that, as long as the SAF has a negative carbon intensity. So it's a huge challenge regardless, but today 10% of all oil demand is jet fuel. Global oil demand is 100 million barrels a day, as you all know. 10% of that, 10 million, huge number. And that would never happen, frankly, if it was just about removing the fossil fuel. Instead, we need to achieve that with negative carbon intensity, and we can do that with the carbon removal and carbon reuse technology that we provide to the world. Very important. And the rest of the world is catching up and then have to catch up and have to keep pace with the US, which this page illustrates, and you can reflect on that at your own time. Now, VELOCYS, what have we achieved in the last 10 years in particular, and that's summarized on this page? And I would say that it is a huge amount of research, development, but also piloting and commercial demonstration and testing and organizing for delivery. A lot of technology companies get really excited when they've invented a new reaction or a new product, new technology that achieves something in the laboratory. When you've done that, you've done sort of 10% of the journey to get to revenues and sustainable business. So we achieved that before 2010. We together in Oxford Catalyst here in Oxford and VELOCYS in Ohio separately developed some amazing technology. That was the start of the journey. The following 10 years was about piloting, testing it in the real world. Does it work for deliverability, maintainability, operability, safety? Can it be distributed? Do we have people we work with who can help us to distribute the technology at large scale? Do we have customers who want to provide the balance sheet support for the offtake? Yes, we do. So we're working with British Airways, Southwest Airlines, Bechtel, for example, which are investment grade delivery partners for us. It allows the capital formation of this capital intensive type of technology to trigger and accelerate the carbon circularity, carbon reuse, and carbon removal from the international aerospace industry. So there's a number of different milestones, including that SAF from our demonstration in Japan was used straight into scheduled commercial flight in Japan. That was not a demonstration flight. That was not a test flight. It was an on-spec, commercially ready fuel that was drop-in straight into wing, because we proved, and our partners proved, that the jet fuel was identical with the fossil fuel that they were running on, and therefore 1/3 of the fuel went in as SAF and 2/3 was fossil fuel, and off they went. And of course, the flight was perfectly normal, event-free, because it was on-spec Jet A1 effectively. But it was made out of woody biomass instead of crude oil, which is a huge achievement from a production side, but from combustion, it was no surprise because it performed exactly the way Jet A1 performs. So that is, but that's the end of a long journey over 20 years to achieve that. Now we have a number of other milestones we have achieved, and most importantly is the completion of the Ohio reactor manufacturing facility to demonstrate that we can deliver to our customers in the order of 12 reactors per year, which we promised our shareholder that we were going to do in November 2021 at the fundraise. And we have achieved that in record time, built a reactor manufacturing facility from a greenfield, from scratch, now completed fit out stage, and our commissioning is starting up the production line. So not only do we have the technology, but we can deliver it at scale. And the output of that facility is equivalent to allows our customers to convert and process 1 terawatt-hour worth of syngas into jet fuel per year, and the associated removal of carbon dioxide, which is pretty powerful if you compare what an average gigafactory in batteries can achieve these days. Okay. So I'm going to hand over to Phil now for the update on the projects, company financially, and the future.
Yeah, so thanks for that, Henrik, and thank you for joining us. So as Henrik said, I'm Phil Sanderson, the CFO. I joined VELOCYS 1 year and 15 days ago, I think. So it's been a busy year. So I'll expand a little bit on where we are today. We'll talk about the manufacturing facility and then get into some of the numbers. So our focus today, with the background that Henrik has given you, is very much about building our commercial customer pipeline. We see a huge increasing focus on SAF, the policy tailwinds that Henrik's talked about, capital being mobilized in the States for people who want to supply SAF to the very needy airline industry, and our technology can play a key part of that. So building that commercial capability is our critical focus. A key part of that is the two projects that Henrik's talked about, Altalto and biofuels. And they really are, these reference projects are the blueprint for our future customers. And they will be VELOCYS's first key clients in terms of delivering our technology licenses, our reactors and our catalysts. And critical to that and the success of those projects is our master relationship with Bechtel. So Bechtel has commenced the FEED, so that's the front-end engineering and design work for Altalto. So that is, if you like, building the plan for the front and the building the instructions, how you build it, all the logistics, getting that ready, and that is underway. And with an intent that we will turn that into a full-fledged construction contract, which Bechtel will execute. And likewise, we intend that Bechtel will work with us on our US biofuels. And that really makes a difference, because it means not only for our clients do we deliver the technology and the technology licenses integrated across that chain that Henrik told you, but we can also deliver to our clients a delivery mechanism, someone who can actually put the plant on the ground. And I'm sure many of you are aware that Bechtel is one of the world's most respected engineering companies. I mean, here in the UK, they have seen through some of the most difficult projects that have been undertaken, Eurotunnel. They are experts in the fuels business. They own the LNG engineering business around the world, and it is a huge honor for us to be working with them to help roll out sustainable fuels across the world. So that's really key on the project. So the other part that is important that we've been working hard on the project is raising that development capital that Henrik's been talking about. We are not the ultimate owner of the project, and therefore the time is now to bring in that capital to fund those FEED programs and to get that through to the final investment decision. And we will be doing that over the second half of this year alongside the investment bank who are advising us. And the other thing that Henrik has already mentioned, but is hugely important, is our capability to deliver our product. So the reactor core manufacturing facility that Henrik just talked about in Ohio, you can see a couple of pictures taken there. They're very recent, last week, but we're super proud that we have been able to construct and fit out this plant. You can see it doesn't look like a refinery. It doesn't look like a metal working line. It looks more like a chip factory. It's full of exceedingly high quality, super sensitive laser welding equipment, and it is now ready to go. All our equipment, actually that's not true, there's one piece of kit that is being delivered as we speak, but we will be in a position to start commissioning that facility by the end of this year. And again, this is something we have done in collaboration with a partner who has put the capital into this. We have put in a very limited amount of capital to do the bespoke bits and pieces that we need, but we have a partner who is standing alongside us. We have a 15-year lease, and they have provided the capital for that. We sit in the Union County Enterprise Zone, so again partnering with the local authorities there, and so we are hugely focused on the fact that we have to be able to deliver our technology to our clients. This isn't something that can be done in parallel, and so we are now ready and we are on track so that we'll be able to deliver our first reactors into our reference project and build on from there. We have sufficient capacity. We believe, if we look at our projections, this facility will be able to produce our demand up until at least 2028. So if I just turn on to the numbers, 2022, I think for those of you who saw, we had our AGM last week, so finally closing out the 2022 financial year. Within that, I mean, we have some small revenues. Key with our revenue model will be once we start licenses and reactor and catalyst sales, but to get to those licenses and reactor and catalyst sales, we need to provide input into clients' engineering studies and design, and so we have We have a small period of revenue from our clients in Japan and in Northern Europe as we help them go through their process. So we recognise that in 2022. Our operating expenses were £16.3 million. That's 3 million more than in 2021, and that's because the acceleration and activity that is taking place on the reference projects, the engineering services that we need to deliver those, as well as ongoing development in our catalysts and running the company, running our engineers in our offices. We keep a very tight control on our expenses. I'm very impressed with the company and the way that people really do challenge all costs. The output of a small revenue and the expenses is a loss of £14.5 million for the year. That was in line with market expectations. In fact, it was probably a little bit better than market expectations, and to be expected given the stage of the evolution that we're at. Our net assets of 16.7 million, about some at the end of the year. Some of that is cash. The others are the assets that we hold, our intellectual property, and indeed the site for the Altalto refinery, which we acquired in 2021. We have about £9 million in the bank as at the end of last week to allow us to continue driving forward the company activities. We do not sit on large cash balances. We have never raised more money than we needed to execute the program that we had in front of us. We're very proud of that, and as I said, we watch that very carefully. And of course, the other big part of 2022 was the award at the end of the year from the UK government for Altalto and our e-fuels project, eAlto, that has allowed us to move into feed with the project alongside British Airways. So if we just move on to, where does that lead us? I mean, I think, importantly, obviously, the next phase as we move away from the development and all those milestones that Henrik showed and now move into operationalization and to start delivering cash. As I said, we deliver our key cash from, first of all, when the technology licenses are signed up, and that actually happens in the feed process that I talked about. So our technology licenses will be signed up into both Altalto this year and into Bio when feed commences early next year. And that's the first initial significant revenue that we earn on a project. But that revenue goes over the life of the project. Obviously, as we provide the reactors into the project and the project starts up, that's a significant revenue generation. But then over the life of the projects, the 20 to 30 years that we expect these biorefineries to run, we will continue to support and service and importantly provide catalyst services, including a catalyst lasts for about 2 years. So every 2 years there needs to be a change out of the catalyst. And so that will go on over the life of the project, delivering rateable, steady cash flow to VELOCYS, in which we can start to really build some sustainable value. As I said at the beginning, our main focus is really expanding our commercial and business development function to be able to support the clients that we see coming with the regulatory tailwinds that we've talked about, as well as building up our manufacturing capability to start to produce the reactors. As we've said, one of the important parts of the second half of the year is raising the development capital and bringing in new partners and the ultimate owners for the investors in our first clients, the UK and the US reference projects. And that is will be a very important part of our journey as we head through in the short term. And then continuing to build and look for new customers across the world. And as Henrik shared with you that map, we see we are very focused on where we look for customers. We will only look for customers where we see the regulatory framework is going to incentivize the mobilization of capital. And so as we saw, that's no longer just in the Europe and the US, but we start to see great opportunities in Asia as well. And we'll continue to focus on maintaining the FT solution as the best enabler for decarbonisation of aviation. And we won't stop here. We will look to continue to develop our technology to drive efficiency and effectiveness, because that's the next step in terms of operations that will need to be delivered and that will provide ongoing value. And as I said, as we build our customer client pipeline and start to build our revenue stack across those different parts of our revenue earning capability, we're looking to create long-term sustainable rateable value for our shareholders. And so just to summarize before we get on to Q&A, our commercial strategy is really being driven by and pushed forward by the recent US policy changes and the changes we see in Europe and EU. We are moving forward the reference projects by the appointment of Bechtel, by moving forward with our financial advisors to deliver the development capital to take those projects forward. We see significant interest from lots more potential customers that we're engaged with. We see that market being driven by the zero carbon agendas and the legislative support, and we build on that. And so we continue to look at driving our pipeline growth and delivering on our commercially demonstrated patented valuable FT technology. And we continue to aim to be a leading provider of second generation SAF solutions, which will enable the decarbonisation of the aviation industry. So we'll finish there. I'm going to hand you back to Alex, and then we can get into some of your questions.
Phil, Henrik, thank you very much indeed for your presentation. Ladies and gentlemen, please do continue to submit your questions using the Q&A tab situated on the top right corner of your screen. While the company take a few moments to review those questions submitted today, I would like to remind you that a recording of this presentation, along with a copy of the slides and the published Q&A, can be accessed via your investor dashboard. Henrik, Phil, as you can see, we have received a number of questions throughout today's presentation. And if I may hand back to you, Phil, and kindly ask you to read out the questions and give responses where appropriate to do so, and I'll pick up from you at the end.
Okay, so the first question that we had, and I think we've touched on this a little bit, but is how do we expect to fund the reference projects? What is the company's plan around its role in the reference projects as we go forward, and how will we commercialize those? So Henrik, maybe I can hand over that to you.
Thank you, Phil. We have embarked on developing the Altalto and biofuels reference project to demonstrate a standardized solution for converting solid feedstock into SAF. As Phil said, we expect these to become obviously VELOCYS technology customers. And but it is very important to make it clear that we do not intend to retain any equity ownership in these reference projects. The development capital equity that we have today, which is 50% in Altalto and 100% in Bio, we expect that to be diluted in the imminent fundraise that one of the top investment banks in the world are leading right now. But ultimately, when we get to FID, we expect to convert that development equity that we have into development royalty over the lifetime of the asset for these, in return for having developed these projects. So that is the process. The natural owners of these kind of assets are going to be energy transition infrastructure investors, and there's plenty of those out there with a huge amount of capital and a shortage of projects, frankly. So people who have been investing in wind farms and solar projects now, where the IRR is converging down towards 6, 5, 4%, are now looking for what's the next generation decarbonization technology, where it might be a little bit more new, a little bit more, let's say, new integration of technologies, but where the returns could be slightly north of 10%, for example. Well, then they come looking at our biorefineries. So there's plenty of capital around. Our job is to present these projects as de-risked as possible, secure as much subsidized debt as possible, which is available in many countries, and offer the equity investors a nice competitive equity return. And there's strong demand for that. So I'm very optimistic for our ability to raise that.
Okay, so A few people have asked this question, and I know that it has been asked quite a lot, is why will we not name the investment bank that has been appointed to advise on the development capital raise? It's a technical issue. We've taken legal advice, as has the investment bank. These raises are targeted, as Henrik said, to large private companies and investment funds, a number of them, if not predominantly, in the US, and therefore the raising of that private finance falls under the SEC rules and regulations, which are very tough. And one of the areas where there is a significant level of requirements is when it comes to selling and marketing of restricted securities, so securities that aren't in the public domain. And to enable that, to allow for you to sidestep some of those rules and regulations, the SEC provides an exemption. It's called 144A exemption, if people are interested. That means that you do it on you are very, very restricted in what information you can release, and the discussions that you have are primarily between yourselves, or exclusively between yourselves and large, sophisticated investors. And therefore, that goes down to the level of telling people who your advisors are. So unfortunately, we are just not allowed to say that. It's very clear from the legal advice that we've taken. All we can say it is one of the world's top 5 investment banks, and we are delighted that they are keen to work with us. So let me leave that there. Next question may be on new customers. So I think a question about where are we with Japan and where are we on the customer pipeline. So Henrik, maybe you can talk to that.
Okay, thank you, Phil. Now, in particular, after the introduction of IRA 22 and the recent clarification in the UK under the recent second SAF consultation, and the Fit for 55 regulation in the EU, where it's clear it's going to be very strong, aggressive mandates for SAF kicking in 5-6 years from now, or even sooner, frankly. That has created a huge amount of interest from various developers and resource owners who have hydrogen and carbon from various sources, as long as they're not fossil, who come to us and say, hey, we've got this source of carbon and hydrogen that is renewable. How can we convert this into sustainable aviation fuel and help our customers, i.e. the aviation industry, to mitigate the massive liabilities of burning fossil jet fuel going forward, as well as creating jobs and a value added to these waste products. So we are frankly being inundated with requests from people to help them to do feasibility studies around the type of feedstock, the amount of feedstock, the logistics of the feedstock, the conversion process, and the regulatory side, and the integration of the whole end-to-end solution. Some are well-informed and well-advanced and know what they're talking about, and are credible and capable developers and customers, therefore, of us. And some, frankly, are optimistic, let's say, opportunistic developers who we try to stay away from. And some are owners of these resources, upstream or downstream, and some are pure investors. So we have to be very selective now, but we have a strong client pipeline of so-called feasibility, pre-feasibility, feasibility engineering, pre-feed engineering work that we get paid to do. And we are selective and make sure that we work with people who can bring these projects to not only to feed, but into FID. We'll never have a 100% hit ratio on these, but it's very rewarding right now because we have to be selective on the number of customers we take on. It's very exciting, and it shows us that there will be hundreds of these kind of projects in each area, EU, dozens in the UK, hundreds in the US, and of course in Asia as well. So no shortage of sites and feedstock and opportunities, but there's a scramble for technology and the freedom to operate, which we can provide given all our patents we have in this space.
Yeah, and I mean, as Henrik said, I mean, this is a very early stage industry. There's an awful lot going on, and understandably at early stages, potential clients are very keen on their confidentiality. So when we can announce something, we will announce something. But we work with a lot of people who are in very competitive environments, either looking to access feedstock or land, and we respect that. Let me just take a question that we've been asked around the project funding. So we've talked about the development capital raise that goes on, but we had a question about the grant for Altalto. And how is that working, and how is that funding working at the moment? So we're very proud that we received the largest grant under the Advanced Fuels Fund from the government for the Altalto project that we're developing with British Airways. With the land secured, the planning permission already obtained, the license agreements for the whole chain of the technology signed up, and the last one of those to be VELOCYS, which we'll sign up soon. And Bechtel delivering on a full scope feed contract with 40, 50 plus people already working on that. We believe that Altalto is one of the most advanced, if not the most advanced, SAF gasification FT project in the world. So we have our noses in front, and that is there because the UK government awarded the AFF grant. In some ways, we're going too quickly because the UK regulatory consultation is not complete yet, and that needs to be complete so that we can demonstrate that we'll have an investable project. We'll be able to enter into offtake agreements because we will know what the framework is under which the SAF needs to be sold. So we're very fortunate. We've already been able to recover £7 million of the funding from that grant. That has allowed us to really kickstart the feed process. And currently, that's VELOCYS and BA, are jointly funding the activities that are ongoing there. As we've said, we'll shortly be launching the development capital raise, and that will deliver the matched funding. So we're going out and targeting to bring in partners who will bring in 50% of that funding, and that we will be doing over the second half of this year. And those partners we expect will be the partners who will want to take this project into its final investment decision and through to construction. So hopefully that explains where we are with that. Right, there have been a number of questions of a more corporate nature, so it's probably makes the most sense for me to handle those. Question on the going concern statement that was made in the RNS and in the annual report and in our auditors' letters. Now, what that is a statement from the directors and the auditors saying there's material uncertainty relating to the going concern. And now that is not an unusual statement for pre-revenue companies. So the standard that's required by the independent auditors is that a company needs to demonstrate that it has sufficient cash at hand, so in the bank account, on the day you sign the account, to operate for the next 12 to 18 months. So on the day we signed the accounts, which was the 20th of May, which was before we had finished the equity part of our current fundraise, we didn't have that money in the bank, and therefore we didn't have that cash at hand to be able to say that we can operate the company as per our business plan for the next 12 months. So the auditors are obliged to make that comment. It is not unusual at all, and in fact, historically, I think that comment has been in VELOCYS accounts a number of times in the past. With the additional equity that we raised in June, and with our plan to raise additional capital through the convertible loan note instrument, on which we've already got a conditional commitment from specialist US investor Carbon Direct. In the next 3 months, we expect to have sufficient capital to take the company through into its full operations and beyond. So that deals with that. A couple of other questions on corporate matters. So a number of questions around executive pay. It would be obviously inappropriate to discuss individual details around that, but I just note that resolution 2 at the AGM which is the advisory vote for the approval of the directors' remuneration report, was supported by 93.75% of the shareholders. So the overwhelming majority of shareholders support the Remuneration Committee's decision. The Remuneration Committee works exactly as you think it would. I mean, it employs the principles of executive pay as per all the good governance guidelines. Those principles require that, you know, VELOCYS offer, and this isn't just executives, it's the whole company. We offer market competitive pay. We benchmark those salaries in the market. Where appropriate, that includes performance-related bonuses, long-term incentive options, and it is set by the Remuneration Committee, supported by the majority of the shareholders, to attract the required skills and experience that the company needs to move forward and grow. I think possibly linked to that, and it's certainly part of the same part of the annual report, is questions around the level of shares that directors hold in the company. Now, in the last 12 months, directors of the company have bought both in the open market and subscribed to the placement. And I know before I was here that has been common practice. The directors have always subscribed to shares at when fundraisers have taken place, and a number of directors have bought in the open market. It's just worth noting that as the company moves from its development phase to its operating phase, you know, the current board and management have been appointed to take this significant step, bringing many years of professional expertise across relevant industries that are going to enable the successful move to commercialization for VELOCYS. VELOCYS has been a public company for 17 years. The existing board have tenures ranging from 1 to 5 years. I would say at a guess the average is about 2.5. Levels of ownership are not going to be aligned with founders' equity type levels. And that's just not how it's going to be because of the nature and the evolution of this company. Importantly, a very significant part of executive and senior management, and not just the executive, but across the senior management level of the company, is in long-term incentive options. And that clearly ties the delivery of our targets to the value of the company, and that we believe is important, and that's what the Remuneration Committee pushes forward. So hopefully that covers off those questions that a number of people have asked. Right, let me just take a look at what has come in, because some of you kindly put some questions in beforehand, and others have just come in now. There's a few on the convertible loan notes. Let me just gather my breath a little bit. We have a question around sort of the broader macro competitive space. Do you see a threat from electric-powered commercial aviation over the next 1 to 2 decades? So, Henrik, you reflect on that while I just take a glass of water before I talk about convertible loan notes.
Right. Well, the short answer is no. The amount of power to jet fuel powered turbines generate on takeoff is equivalent to 500 megawatt. That's equivalent to what you have in a medium-sized power station to generate the thrust that takes a jumbo jet off the runway. Hydrogen, you need 7 times the volume of hydrogen compared to jet fuel in order to develop the same thrust. So you need to have a completely different airframe. You cannot anymore have your fuel in the wings. So you have to have an enormous underbelly, that is where you have your hydrogen under super cooled and very high pressure in order to begin to think about hydrogen as a fuel for aviation. It works excellent for rocket fuel to send a rocket to the moon, but it does not work well for commercial aviation. If it did, it would have been invented by now, because hydrogen as a fuel has been well known and well understood for many decades. Even less likely for batteries, not the least because you again need about 10 times the weight of the batteries, which means that there is a jumbo jet not much space for either passengers or freight once you have those batteries. And the batteries weigh as much when you take off as when you land. And you all know that you can't land with a fully laden a normal ordinary plane. You have to dump the fuel before you can land, otherwise you break the wings. So literally you have to dump the batteries before you land, and that doesn't really work well either. So yes, I know that there are some experiments going on with 1 or 2 or 3 or maybe 5 passengers, but it is extremely unlikely to be of any use. And Boeing and Rolls-Royce and many others are saying the same, that it's unlikely to be of commercial significance other than very, very small scale, maybe taxis for helicopters going from city center to the airport or some things like that. But for decarbonization of a meaningful scale of the aviation sector, neither hydrogen or batteries are likely to be of any significant benefit in the next number of decades, if ever.
Okay, thanks, Henrik. Right, so from technology to finance. So questions about the convertible loan note that we announced, what that means, how it works, and what some of the consequences of that will be. So the convertible loan note is capital that has been offered to us by a specialist US investor called Carbon Direct, who invest across that circular sustainable carbon cycle that Henrik started this presentation with. They approached us last year, having identified us as a hole that they have in their portfolio, and having looked across the market, identified us as being the best technology to fit into that space. We've been through a process of extensive due diligence with them, and together have come to an offer from them to invest into the company via a convertible loan note, because as a specialist US investor, they are not interested in investing in a UK AIM stock, and that's just the reality of their investment thesis, and they are not alone in that. So we have negotiated with them a convertible loan note, and that convertible loan note, all the conditions are agreed. There is one outstanding condition, which is that there will be another investor or investors alongside them subscribing to that loan note. So their commitment is for $15 million, and we're looking to and currently working with a number of interested parties who will subscribe alongside them for another $15 million. It is an exceedingly attractive form of capital for us. There is a 0 coupon on that loan note, so no interest chargeable. If you were to look at equivalents across the market, you would expect a coupon of around 12 to 15%. The coupon is 0, but it is only 0 if we obtain a secondary listing on a suitable US market within 21 months of that loan note being issued. And the point of that is that they are happy to hold US equity. And why do we see that? Well, that will provide a wider potential capital base for the company in a market where that decarbonisation investment is significant and growing. And therefore they are happy to see, and that they believe that will fit their value and investment thesis. For us, as Henrik said, a company that grew out of a UK university research project and a US space development project with offices in the US, in Houston, our manufacturing center that we've talked about today, in Columbus, Ohio, and our offices here. A dual listing fits with the culture of the company, and it fits with where we see our client base being in the future. So we see that as very attractive. As I said, it will expose the company to a wider potential capital base in a market where we see a significant number of sustainable fuels projects that will use our technology being deployed, and therefore we see that as a valuable step for shareholders. We will not be delisting in the UK. It will be a dual listing. I'm sure many of you who invest in UK stocks are familiar with that. And we will be, once the loan notes have closed, moving rapidly to start that process. So I said that loan note will be for $30 million or thereabouts, and that should, for our capital, allow us to move into more significant revenue generation. So I'm conscious of time. We're about at the top of the hour, so let me just hand back to Alex.
Henrik, Phil, thank you very much for being so generous with your time and addressing those questions you can from investors today. And of course, the company will review all questions submitted today and we will publish those responses on the Investor Meet Company platform. But perhaps before redirecting investors to provide you with their feedback, which I know is particularly important to yourself and the company, Henrik, could I please ask you for a few closing comments?
Well, thank you. Thank you, everybody, for joining us. Thank you for those of you who have supported us for a long time. We'll have had a let's say, a rough ride, to put it mildly, in terms of capital value. Having said that, it is always unpredictable exactly when the climate, the mandates and the strong incentives for the deployment of this technology for removal and circularity of carbon was going to kick in. We thought it might kick in at the end of 21 when the Build Back Better plan. We were hoping things would go quicker in the UK. But now it has happened. It has happened now. It is in legislation across Europe under the Refuel EU. It is in legislation in the US now in IRA 22, and it looks like it's happening here in the UK as well. So the time has finally come. It should have happened 10, 20 years ago when we all signed up the Kyoto Protocol, but it hasn't, and we are late in the cycle as a human race to take this challenge seriously. And one of the biggest challenges is to decarbonize aviation, because the alternative is to stop flying. And what we've seen recently is that when capacity is constrained for various reasons for aviation, people are prepared to pay whatever it takes to still fly. The price sensitivity isn't there, because the alternative is to take a boat or a train for days or weeks or not travel. So I would say for us all as humanity, for business and for pleasure, people want to fly. It's a wonderful, amazing gift to mankind to be able to fly. We just have to be able to do it without destroying the planet. And that opportunity is there now, when we must do it. The governments are telling us we must do it now. We are prepared to pay for it. Clearly, the young generation refuses to go on any transport mode, at least my kids, unless it's decarbonized. So I think it's up to us to make it happen, and we are privileged to have one of the key technologies that allows this to happen, and we can deploy it at scale now. So thank you for your support, your patience, and inspiration to us as executives in the company for supporting VELOCYS in thick and thin. And we're here now, and we are able to deliver right when the mandates and incentives are coming together. So thank you very much for your support.
Henrik, Phil, thank you once again for updating investors today. Could I please ask investors not to close this session, as you will now be automatically redirected to provide your feedback in order that the board can better understand your views and expectations. This will only take a few moments to complete, and I'm sure will be greatly valued by the company. On behalf of the management team of VELOCYS PLC, we would like to thank you for attending today's presentation. That concludes today's meeting, and good afternoon to you all.